The market now expects a Fed rate cut in September after Jerome Powell's dovish speech at Jackson Hole. With inflation edging closer to the target and the slowdown in the labor market in July, the upcoming non-farm payrolls report on September 5 at 3:30 p.m. GMT3 will reveal the health of the U.S. job market. What will this mean for the Fed's next move and where could the markets be heading? In this video, you'll get the expert insights and the potential trading opportunities to watch for this month's NFP report. And before we dive in, remember to click subscribe and notification button so you don't miss the latest market analysis and updates. Last month's non-farm payrolls report revealed slower than expected job growth, with only 73,000 new jobs added. Additionally, the unemployment rate ticked higher, rising from 4.1% to 4.2%. Wage growth, however, came in slightly stronger than expected, with average hourly earnings climbing 0.3% month-on-month and 3.9% year-on-year. The underwhelming jobs data raised concerns over the U.S. labor market and fueled volatility across financial markets. The U.S. dollar index slipped to a two-day low, while gold prices surged toward $3,350. Meanwhile, oil prices managed to rebound slightly after 2 days of losses, while the three major U.S. stock indexes was down on the weak job growth, but later recovered on rising expectations of a Fed rate cut in September. To trade around the NFP release, it's crucial to watch the forecast numbers. These can give you a solid idea of potential market moves ahead in Forex, commodities, and stocks. In the upcoming NFP report, the job growth figure is expected to remain below 100,000, with forecasts ranging from 73,000 to 78,000 jobs added. On the other hand, the unemployment rate is expected to increase from 4.2% to 4.4%. Wage growth is projected to decrease slightly, with average hourly earnings rising 0.3% month-over-month and 3.8% year-over-year. Now, let's break down the potential trading opportunities for three key assets that could experience high volatility. Stay with us until the end for some exciting trading ideas. Let's start with the US dollar index. The dollar index dropped below the 98 mark on Monday as market expectations of a September Fed rate cut increased to approximately 88%. If the August NFP report further disappoints the market and confirms the rate cut expectations at the September Fed meeting, the index could decline further to the 97 level or below. Conversely, if the jobs report exceeds market expectations, U.S. bond prices could rise, leading to a rebound in the dollar index to the 98 level, within the resistance zone at 98.68 to 99.05. Moving on to gold. Spot gold rose to $3,480.56 US early this week, marking a 4-month high and a 5th consecutive day of gains. If the overall jobs report exceeds market expectations, gold prices could decline and test the support levels at $3,414 US and $3,393 US. Conversely, a weaker jobs report would push gold prices higher to resistance levels at $3,524 US and $3,544 US. Lastly, let's look at the S&P 500. The S&P 500 experienced another monthly gain in August, boosted by rising Fed rate cut expectations. A stronger than expected jobs report could lower the September rate cut hopes and lead to a potential decline of the index to support levels at 6,418 and 6,402. Conversely, a weaker report may push the index toward resistance levels at 6,544 and 6,560. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.